What it do? All right, guys. Should we start now or should I wait like 1 minute? I'm gonna wait like 1 minute. But yeah, I think we're gonna go over how to identify lagging assets versus true reversals. So how to tell, when to apply SMT, when to not apply SMT, and stuff like that. And then we'll just do like questions or whatever. It's got a gold. Alright. Alright. Okay, let's go. Let's go over it today now. Alright. That just hurt my ears. So when we think about SMTs, we're going to talk about identifying true SMTs. So let's go over true reversals. So whenever the asset that is actually sweeping, right, creating a higher high when bearish and creating a lower low when bullish, we want to see this asset show the willingness to trade away, right? Because if it doesn't, then this asset is likely lagging and it's going to take this high, right? Because in order for these assets to be a true Kraken correlation, this asset has to catch up to this asset in a sense. So ideally what you see is this strength actually switch within the distribution away from this manipulation. So this can look a couple of different ways. So right, it'll put on a higher high, and then it can put it in a lower low immediately after. It doesn't have to do that. It can also, the way you can gauge strength or switching a strength is this asset here will kind of expand with a larger, displacement leg, and you can view that with like fair value gaps, the size of fair value gaps. So here, I have drawn a larger fair value gap than this one. That's one way. Another way is this asset might start consolidating. This asset might start. This asset will like start consolidating, and this asset will be like expanding. And the reason why it's doing that is so this asset can catch up. The stronger asset can catch up to the weaker one, if that makes sense. So it doesn't mean that, this asset here will get to this low first. It just means that we are going to reverse and both assets will hit this low. I have a bunch of examples of this. So like I said, there's multiple ways you can view this happening, right? It's within the distribution leg, maybe we're creating lower lows here, maybe we're creating higher highs. Like I said, the initial reversal point within sweep points there, or just within phases of price delivery, or like fair value gaps. So stuff like that. Now, how do you know if an SMT is likely to break? So this is really when you hit any high, right? So if this is going to be a manipulation, then what do we want to see? We want to see a reversal signature, just like over here, right? But when we don't get that, when the stronger asset more so consolidates, this generally just means that this asset is going to continue, right? Both assets will reach into this high. This asset is just lagging, right? So lagging or fake SMT. And generally, how do we know it's lagging? Is it's going to like probably create a lower low here, right? And this is what is going to hold and expand price, right? This is what will kind of send price higher to break this SMT in a sense, if that makes sense. So it's pretty simple. Now there's a couple of other things I want to show you guys, but does this make sense to everyone? It's actually like pretty simple. And I just want to show you guys this easy little diagram, right? Just showcasing that, and we'll get into some more detailed stuff. But yeah, let me know if that makes sense. Just want to make sure everyone, if that makes sense. All right, looks like we're sleeping right now. All right, we'll just move on. All right, so let's go into some examples. Here's another scenario when markets are uncorrelated. What I mean by that is maybe one asset hits premium and discount of a range. So let's look at the correlated asset, which would be gold. You see how it's not in premium discount, right? So that in itself is like a form of Kraken correlation. But when the weaker asset, right, hits a level of like a key level or something, which would be EQ of this range or this opposing candle or whatnot, we want to see this strength start to switch. We want to see this asset start to catch up to gold, the stronger asset. So do you see how over here we kind of start consolidating, but over here we start to expand away, right? This is the strength starting to switch. You can see that via gaps. So you see this 4-hour fair value gap here? Look on gold. We do not have that, right? So that's the strength switching there, right? This asset more so expanded and consolidating. This asset expanded and retraced, right? So they're both going to continue, right? But yeah, we just see that this asset just made a deeper run in the range. And this is fractal, by the way. This can happen on any time frame. We're going to see a lot happen on the higher time frame and stuff. And I think I have an example here, I believe, right? Yep. So this is an example of an SMT being created, right? Where we see an SMT down here on NQ. I think NQ takes this low up. So you show NQ takes this low up. And then over here, we're creating a higher high. And over here, we're definitely creating a higher high. Y'all see that? So it's like, let's just look at the phase of the price here. So we're just coming off some sort of expansion, right? And you see this little consolidation range. Now, when we think about consolidations after expansion, they can look mainly like two different ways, or three different ways. So here are the three different ways. So for one, it's an inside bar. If I can find my candle border. Let's go look at this. This is something that we went over a couple streams ago. An inside bar is just price staying in between the previous candle's high and low. So it's going to look something like this, right? That's one way. Another way is just simply price staying in between. Well, let me try to draw this correctly here. Like something like this. Right, it's just staying in between a range. This is the most obvious one. And then there's seek and destroy, where price is just taking out both sides, right? So, or a broadening formation, whatever you guys want to call it. These are the three different types of consolidations, really, that we see in the market. And they're all continuation signatures, meaning if we expanded prior to this, then generally we're going to expand again. So what we see here is you're coming off an expansion leg, and we're seeing this, right? A broadening formation, or seek and destroy. You'll see that. So we have this SMT, right? And some people will be like, oh, we have a CSD, yay. But that's not the case, right? Well, it could be, maybe, but what do we need to see this next day do? Or what do we need to see away from manipulation? We need to see expansion, right? So let's run through the if-then scenarios. If this is going to be bullish, right, then you'd want to see expansion. If it's going to be bearish, then what's the only place to manipulate? It's this high, which is where the new weekly candle is opening near. So when you think about, framing a daily profile or anything like that, it's what are we opening near for the day to form its high. Same thing for the weekly candle. What is the weekly candle opening near? It's this swing point on the daily time frame. So we can also anticipate an SMT forming here with this high, because when we look at this Thursday high, look at NQ, look how far away we are from this high. So we can anticipate YM taking this high out, and then NQ creating a lower low, right? So what would that be? Another SMT. So now you have SMT on both sides. So you're like, how do we even know which one's going to hold? Well, you're just going to see like what, profile or whatever supports this next day, essentially. And you're going to see this strength switch. So let's play it forward. So you see this day opens high first. So let's go to this day. So you see how it opens high first. So when we actually engage with the level at first, we don't reverse, right? Because obviously this hits it in the first hour of the day, right? So then we kind of move the goalpost here, right? We consolidate, as you see. So then we could potentially reverse off of this high, right? But what do we not do? We don't reverse, right? So when you come into the session, right, and you don't see an established low of the day, and you don't see an established high of the day, this can't really be a high of the day because we didn't really trade into anything, right? We didn't manipulate anything or anything like that. If I go on NQ as well, we're actually consolidating. How is it consolidation? Inside bar. See that? How do you want to leave a consolidation? You want to manipulate it. So the range high, right? So a lot of times when you come to the daily, or not the daily, when you come into the day, a lot of times there's going to be one place to reverse from if there has been no reversal yet. A lot of times that's just going to be highs and lows that has been created on the hourly or 4-hour time frame prior to New York session. So this is, or prior to the driver. So here is this 7 o'clock high that is formed prior to the driver. This next candle is 9 o'clock, right? So one of the if-then scenarios, I can actually pull this up real quick. Here. All right. Okay, so if a reversal has not been put in prior to a driver, then we want the driver to reverse. This is one of the if-then scenarios we think about when approaching the daily profile or the daily range or whatnot. So what we see here, there is no reversal prior to driver. So the driver we want to see create the reversal. So where's the only place we could reverse from? It's this swing high. So that's what happens here, right? Now, if this is going to be, a true bearish SMT, then we want this to hold, right? We want the stronger asset to also expand away from this, right? So what we also see is a two-stage SMT with AES. So as you see, that Thursday high that we marked out, which is right here, there's your large range SMT and there's your short SMT, but it's really how we react to this, right? It's very important. So look at this. So here we obviously have 930 reversal. I actually traded this as well. I traded NQ and YM this day. And you're going to see initially, as you see, we have a candle 2 reversal, right? Now look at NQ and ES. We actually reverse into expansion, right, into this low. So now you're like, well, fuck. We have an SMT at the lows now. You're like, how do you know which one's going to hold? Well, look what happens. If I just play price a little bit forward, look at these next couple of candles. Whoops, it's like glitching. Hold on. Look how they're bearish, right? Look on NQ. They're bullish. So what are we seeing here? This asset is consolidating while YM is expanding. Why is it doing that? Does anyone can tell me? I already went over it. Catch up, exactly, Kraken. Yep, it's catching up. So this is how you know this is a true reversal, right? And what we see here is if price is going to manipulate this low, then where are we going to go, right? These lows, right? Or Monday's low. Now I didn't TP here because honestly I didn't expect Monday to do this huge ass range, and I saw that AM caught this whole move, which is pretty cool. But yeah, we ultimately expand into this low. Does that make sense? I keep doing that, whoops. Awesome. So let's get into another example. This is today. Let's go over here. All right, so, okay, ignore my dog. All right, I had to mute my mic. Oh my god, this dog, man. All right. I had to yell at my dog, dude. Like, shut up. All right, so let's go over like some more recent trade that I took on Monday. So when you look at this day, this is a weird day. Like, if you didn't catch these trades, like I wouldn't be mad at you because it doesn't make sense in the terms of the daily chart, right? Because we have failure swings to both sides here in a sense. So really, like, if we just look at the way this daily candle forms, This can give you bias alone, which is what you guys see me do a lot. This is why you see me trade like almost every day, is because I'm really going off how this daily candle forms. Now, when we think about a bearish day, ideally it opens high first, but what do we see this day do? It opens low, but I'm not too concerned with this open low for two reasons. Because for one, it didn't hit a key level, and two, it's just, it filled in this, it filled in a portion of this opening range. As you see, it opened here. It didn't fill it all the way in. This is more so what I'm viewing as an open high, right? You see how it's just opening high here? It's just leaving low resistance. So price is essentially just trapped in between. Oh my God, bro. All right, dude. All right, as you see, price is just trapped in between this high and low. So obviously price has to, hold on. My God, bro. Okay, so sorry about that. Obviously price has to go to one of these levels, right? Price is not going to stay in there forever. So how do we know which level will get traded into first? Well, when I drop lower, what do we see here? Let's compare charts. So what do we see ES do? And YM. So ES actually trades into this high, right? As you see. It creates an SMT, right? Now let's go to YM as well. YM has not traded into this level, but we see that YM is stronger than NQ. Let me zoom in. As you see, it's really, you see this, how this asset's getting really close to this high when NQ is actually creating a lower low. So we already know that this asset is the weakest in Q. And you also see this divergence here as well at the lows. But what do we see after this form? We see that YM creates a lower low and NQ creates a higher high. Right, so now this shows you that this is just a lagging asset, so it just means that NQ and NQ and YM are lagging from ES, right? Because ES already took this high out. But that doesn't mean this S&P will hold. Does that make sense? So this is why y'all saw me take this trade, essentially, right here. Because when we look at the 4-hour candle, or at one point it was bullish, right? As you see, it's a bullish here. So I had that aligned, and then I'm just trading the fractal model, right? We have this candle 2 closure here, right? That 2-stage SMT, that strength switch. So now we know this SMT up here is fake, right? The SMT up here is fake, etc. Does that kind of make sense? And this is just a small trade, right? And you saw me trade to this, and then you saw me trade the sells, right? And it's just reacting, right? So when we take this high out, there is no SMT, as you see. As you see, there's no SMT across any of the pairs. Now, I saw it was like today and yesterday, people took positional entries. Now, we can talk a little bit about positional entries. You guys want me to cover that really briefly? I know I'm kind of like going everywhere right now. But I saw a lot of you guys do that. But I have never covered it, so well, I have it briefly, but let's cover like ideally what a positional entry would look like. So this is not the previous candle. We don't want it to expand, right? We ideally want it to be a reversal candle, right? Because if the previous candle hits a key level and reverses, then what is there to do? It's expand, right? It shouldn't retrace. It shouldn't consolidate, right? But when a candle reverses into expansion, then what can the next candle do? It can consolidate. It can retrace. So you see the difference there, right? And this is something that T-Trades talks about as well. So when you take a positional entry, this is pretty risky, right? Because what the previous candle did is it expanded and hit lows. So when you're taking a positional entry like this, it's a lot riskier. Does that make sense? Rather than if it was like up here, because then there's something to target. Does that make sense? That's just one way, but also you want it to be a very one-sided bias as well. because obviously this is riskier. Now there's some things you can do with position entries because a lot of times you know if this was gonna actually expand lower and stuff like that, it should expand here, right? Now ways you can confirm this is you can just wait for a lower time from candle 2 to form here, right? Where sweep that's high and you can enter off that. So it's a little bit extra confirmation. And you can just trade candle 3 and lower and whatever. Like you can do stuff like that. And when we think about a continuation signature, ideally we don't wick these lows. So if I look at like YM especially, like you see how we're wicking these lows and then kind of like coming right back in the range. That's not ideal like at all, honestly. And like I said, this is not a one-sided narrative in my opinion at all because of the daily chart. It's a bit weird day. So when you see price expand back in the range, this is especially a red flag. When I saw this, I didn't even think about trading this day. I was really not going to trade it because again, goes back to my last like couple streams. If this is going to be our drawn liquidity like down here, what do we not want to see, guys? What do we not want to see? Bro, I keep going over there. Yes, deep retracements. You do not want to see deep retracements until we reach this level, right? Look at some of these examples, right? Where's I'll actually show you like this one. So, no, that's not a good one, huh? NQ. Let's just go with like a distribution. So like this SMT that held or something. What do we not see? We don't see these deep retracements until we reach the draw, these low resistance. We want to see price expanding, right? Which creates expansion candles, right? If you have a deep retracement, what is that naturally creating? Large wicks. So you see why on the lower time frame we don't want to see these deep retracements because we want to see a series of expansion candles away from our reversal point. So what do we see here? Whoops. I'm on the wrong thing. This is what we're doing. We're creating a very large wick here. So it's like a day like this, when I see this, it really puts me off. Because a lot of times this can happen. Price can just, it can manipulate and then trade back into the range and then consolidate. Right? And not trade way down here. It's already a weird day in particular. So I waited for an SMT to form, right? Especially when we created a new high, like it's just super not ideal. So what do we see here? We see this SMT created. Now, what do we want to see on a true SMT? Because look here, we have an SMT. If this is going to be a true SMT, then what does the strongest asset need to do? It needs to expand, which is what we see. Do you see these little retracements? Like, I'm not making this up. Like this is actually how expansion occurs, right? This is how we want to see it. This is how true SMTs form, right? So this is more so what we're talking about, right? So now this is a manipulation. See the expansion into our draw, right? And then we can do whatever. Price can retrace if it wants to, etc. It can bullshit. As you see now, it starts to retrace, But yeah, those are some things that we look out for now. Today's PA. I know a lot of you guys took this. You guys took this SMT with YM. So this is okay, but okay, so let's talk about walking, or let's talk about kind of framing a day. So like when you trade away from a reversal, what do you want the daily candle to support? There's two things really. It's the candle profile and also the opposing run. So like this opposing run is quite large, but it's really the way this daily forms, right? And look at all the assets. Like this day essentially just opens low and then opens high and then opens low and then opens high. Now you're expecting it to open low. What is that? Seek and destroy, right? It's not really something we want to trade. But again, it could happen, right? I don't want to nitpick it too much. Like you have low resistance, right? You have the SMT. But again, what happens? This is all good at this point. Like this is all good. The high of the candle of 10 a.m. is formed from a candle 2. But what does this next candle need to do? Needs to expand, right? What do we see? Well, first off, what is the stronger asset doing? Not reversing. You see this? It's chop. Y'all see that? So this is already a red flag, like I said. And then you just see price creating higher highs. It's not ideal at all. You'll see even on NQ. Right, so first off, you get this candle, whatever, this candle 2 here, the 30-minute. What do you do immediately after? I don't even want to see price come and take this out, honestly, to be honest. Like, I don't want to see that. And then price creates this deep retracement, automatic red flag. Nope. And a positional entry like this. Was there a positional entry today? I feel like there was that people took. Am I tripping? Or y'all took this, right? I think y'all took this. Right? Y'all took that, right? A lot of people. But yeah, this is not ideal. Right? We see this deep retracement. I'm telling you guys, this is not how reversals happen. Right? There's also no two-stage SMT either. It's like, when you think about a day like this, it kind of makes sense why it's just consolidating, because what are we kind of within and what are we kind of below? We're below the draw on liquidity. Like, this is our overall draw. Right? So ideally, we don't want to trade away from this. Ideally. So honestly, I probably think we'll go take this high out. And today is just a continued consolidation day, right? This is really just one giant consolidation. We didn't even go anywhere. We're just inside barring between this candle. So it's just consolidation. And I think we have the first Red Folder news event on Wednesday or something. If we want to trade higher, ideally we manipulate these lows, ideally. But yeah, this PA is hard, man. It's like there's fair swings to both sides. It's just one fat consolidation, guys. So like if you took this, don't like be totally like, why did it fail? It makes sense. It makes sense why it failed, But yeah, those are some things to look out for SMTs. Like I said, not ideal. You want to look for the reactions after we engage with levels, right? And this obviously is not how it looks, right? We even initially like wick this low out. On like all three of the assets, we wick the low out. It's no strength whatsoever, or weakness. Sorry. Positional entry means you're essentially assuming that a wick's higher low is going to form. So let's say you have like a candle 2 or something. Say this is like a bullish candle. Right. It sweeps this high out. So you're assuming that this next candle will expand lower, right? Just the fractal model. Now, positional entry just means, you know how we generally like to confirm the high of candle 3 with the intracandle CSD or some sort of CSD. This is just when there would be like a key level. Maybe there's like an opposing candle within the upper half of this candle's range or something. So let's draw it out real quick. It's going to look something like this. Here's the high of the candle. And then the opening price of this new candle, right? So what you're assuming is if the new opening candle is opening near a invalidation level that resides within the previous candle, you're assuming that the high of this candle would form off of this. Because if it breaks, if this gets swept, then what are we creating? A large wick, essentially, right? If we go and break this high, we're creating maybe too large of a wick or whatever, right? It doesn't really make sense for this to break or whatnot, because you want opposing candles to support expansion lower. Now, so you're just setting a limit here, essentially. You're just setting a limit. Either you're market executing on the opening price of this candle, putting your stop loss at the invalidation point, or you're setting a limit at the invalidation point, putting your stop loss at the invalidation point. Does that make sense? So you're just assuming that the high of this candle will form in this range, right? Within this range here. Does that make sense? So it's a little bit riskier. So I say that you need to have like a one-sided bias, or maybe you can just wait for a a lower time frame candle to closure. So just some sort of reaction off of this level, and then you can market execute on that close, put your stop loss here, market execute here, and then whatever target down there. There's a couple ways you can do it, but this is not how you want the candle to form. Like I was saying, you don't want this previous candle to be an expansion candle, because what can happen after expansion, if this next candle opens up really low in a range, then the price could easily just have some sort of retracement or whatever, right? So ideally it forms something like this, ideally, like, to be honest. Ideally it forms something like this where it hasn't even expanded, so like there's only one thing to do, and it is expand. And within here you would have some sort of like clear CSD to expand away from. It's just riskier, right? Because you're not confirming the high of the candle. But yeah, that's positional entry. Now there's a couple of ways to do positional entry. There's news positional entries that I trade a lot, and there's candle positional entries. So like 4-hour candle. Yeah, like I said, there's like 4-hour candle where like the previous 4-hour candle reverse. Let me try to find an example. What one did I actually trade? Oh, this one. Did I trade that? Oh, no, I didn't trade this, but you'll find something like this. Let's just say you have a reversal. The previous candle reversed. You would just simply like look for a key level within this candle's range. Ideally like on the 5-minute or the 15-minute. Maybe I really wouldn't want to see price come all the way down here. Maybe the 15-minute. No, there's nothing that clean. Oh, I'm right here. If you're like an expansion model trader, or maybe this is just like an example, right? You'd ideally want the low of this next candle to form here, ideally, right? Like you would already anticipate price to hold this, essentially. I don't know if it does. I think it does. But yeah, like something like that, right? Into this here. That's kind of what it is, but fractally. You can do it fractally. The 4-hour candle, the 1-hour candle. So like you can even look right here. You have a candle 2 closure. You would look in this candle's range. Look for an invalidation level. So here you don't have one. No, yeah, you don't have one. So you can just straight up interrupt that. So let's play the next candle or something. So let's say you want to trade candle 4 here. I don't know. You could look inside this candle. Now again, you don't have one. So not every time do you have. You're not opening up near a key level here. So like you can't even do it right there. What about right here? Yeah, kinda. I mean, see this large CSD? It's like this is the only level for price to form its wick from. Like it can only form from this range. If it disrespects this, obviously it wouldn't be a reversal, right? So if you want to set a limit here, put your stop loss down here, or maybe even at this swing point low, or like I said, you can just market execute like this, and then you put your TP up here. Does that make sense? Or no? It's just riskier though. No course has positional entries explained in it, but that's something I'll like when I'm making slides right now. It's gonna be my last slide because entries will be last. I'm gonna cover like how to pair your entries with drivers, how to trade candle 2s on like the 1-hour, 30-minute with drivers, how to take positional entries, etc. Like, and just ideally like how to filter out like like you don't want to be entering after a large expansion candle, like etc. Like shit like that, like a bunch of like little details. That's kind of what these slides are covering. But what else was I gonna go over? I don't even know. Let's just go over some more SMT stuff because that's kind of what we were going over originally. So let's go over some trades that I took. So I traded every day. Like I think I traded every day this week, and this is what I uploaded on my YouTube. Now, when we look at the narrative here for this day in particular, especially I longed Monday. Right? Why would I long Monday? Hold on, let me let the dog in before you start yapping. What's up, dude? All right. Why would I long Monday? Well, what did the previous week do? It expanded and hit these objectives, right? So I'm not really expecting a Monday to expand lower anyways. Monday historically is the smallest range day. So what happens after expansion? We can consolidate. What do we do generally early on in the week, even if we are going to continue from this range? We're going to consolidate or open high first, right? It's going to be a bearish continuation. The candle usually opens high first. So like early on in the week, especially in NFP week, I'm expecting like pretty trash PA or maybe a retracement back to the range. It just makes sense, especially after this close, right? I mean, you have a Monday reversal candle. You can be expecting higher, but I actually shorted this day, and you have to understand what market or what like phase you're in, right? So I'm just trading a retracement, right? And this is how you know, right? So how do I know that this SMT is going to fail? Because there's SMT on both sides here. I'll show you why. I'll show you ES. Right? SMT on both sides. So it's like, how do you actually know which one's going to hold? Well, that's phases of price, right? Because look at the reaction at the highs. What do we see? Expansion, mid expansion, creating a fair value gap. Now, what do you see at the lows? So essentially, ES expanded away from this high and hit these lows. What do we see? Consolidation. So what is that? A continuation signature. How do we gauge what a consolidation is? An inside bar. Right? If I go on lower time frame, bunch of failure swings. Right? So clearly, I'm going to assume that this asset or this SMT is fake. Right? What we talked about over here. Oh fuck, where did I delete it? I think I deleted it. Oh no, it's only a daily chart. This is what we're talking about over here. What the hell? Why does it look so weird? Oh yeah, okay. Here we go. So it's something like this, right? Where ES creates the lower low, but it consolidates. So it's fake. So it just means we're lagging, right? So what slide am I on here? Oh god. Too many slides. Here we are. So let's show you ES here. See how it hits these lows? So for this asset to be the weaker pair here, or to trade away from this low, that's all this is, right? If this is going to be a reversal, then price would expand away. But the fact that it's not shows you that this SMT is going to break, and this SMT or this low becomes the draw. Sorry, I can't talk. Now, if you have an assumed, manipulation at the high of the day, or just area to trade away from prior to a driver, what should the driver do? It should expand away, right? Or it should show some sort of willingness to trade from this high to continue lower. So what do we see on the 30-minute time frame? 9:30 puts in a reversal candle from this hourly gap here. So what is Tinium opening up within a reversal candle, right? So we expect Tinium to continue away from this internal range liquidity and this SMT to break. Now, what we need to understand is when we hit these lows, this becomes a relevant objective, right? Why is this a relevant, swing point? Look at the space between these lows and this low. There's nothing else to manipulate. Just given the narrative, like we outlined prior, we have a reversal candle as well. You're going to see the space between the lows. These are the lows that we're actually talking about. So when price, hits these levels, this is a very potential reversal candidate. And this is where people think that this SMT will hold or something. Like we're going to for sure go all the way to this low. No. That's not true at all. This SMT did a job, right? It expanded into an objective. So when you expand into an objective, what phase of price do you get? Well, you have to wait, right? So like when you expand into an objective, you get a new phase of price is what I'm trying to say here. So if you reverse off of here, then obviously this SMT will eventually break, right? Does that make sense? So this is my trade here. I believe I traded the 3-minute or the 5-minute. It was just off of this CSD on ES though, because it's weaker. Was it 3 minute, 5 minute? I think it was this. It's on my Twitter or something. But this is what I traded here. On the retest, because 10 a.m. opens right here. If there is no CSD in candle 2, then we need candle 3 to create it. If candle 3 creates the first CSD, then you can just enter off of that, right? So I put my stop loss. I'm more so viewing this as a breaker block, right? So higher, high, higher, low, sweep, breakthrough. And again, if this is going to be manipulation, then what should we not do? We shouldn't even come all the way up here. So this is why you can put your stop loss a little bit lower generally. It just depends, right? But if you, there's no reason to put your stop loss here, just being honest. Like if it comes way up here, you're cooked regardless, probably. So this is why I put my stop loss here. And my TP is I'm accounting for these lows on NQ, these relevant swing lows. Like when NQ hits these lows, I need to be around 2R because I know this is a potential reversal point, right? So this is why I just mark out EQ of this range, because if you're not going to, you know, if you're not going to TP here or here, it's like where else can you target? It's just EQ of this range. That's really it, right? And this is when we see NQ take out these lows and you see the reaction, right? It's because they're relevant reversal points. And what phase of price is this? Right? Expansion, seek and destroy, or a broadening formation. This is a type of accumulation, right? So what do we do after we expand, accumulate? We expand again. So that's what we see here. So this is a little portion that I took out of this day. And there's actually no trade here, by the way. There's no reversal candle down here. So there's not even, you can't even trade this higher. I wish I could have ping ponged that, but I couldn't. But yeah, that was that day. When you look at a day like this, like how do you know that YM is going to continue? So this is something I also traded, where we see 930 reverse off of this high, or this low, I'm sorry. So this is a trading a reversal candle, right? Like I said, not expecting Monday to continue lower just because of this huge range on Friday. So how do we trade reversal candles? They need to open low first. They need to put the reversal in from a key level. So that's a check. Just anytime we're framing a reversal, ideally it's paired with a driver. So that's what we have, 930 reversal. And yeah, right, it opens low first and forms a reversal early on the day so you have enough time to expand. And then we're trading expansion candles on the 4 hour back to the opening price. And this is really the only objective I can really refer to. It's really just these highs, because when I look left, there's not much else to target. So it's like, you see that NQ or E, bro. All right, you see that YM is like really close to these highs, right? So you know that there's going to be SMT that forms here. So look here. So check YM out. It's getting really close to these highs. Look at NQ. We're really far away, like really far away. So it's like, how do you know that ES and NQ are just going to be lagging? Meaning they're going to get to these highs, but just later on. Well, it's when this asset fails to manipulate these highs, like we outlined over here, right? If it fails to manipulate, then we're just going to continue, right? The weaker assets are going to continue as well. So that's exactly what we see, right? We see this candle just expand through, as you see, which means that ES will continue in YM, right? That's what we see. And we continue there. Does that make sense? Starting to make sense a little bit? Do you trade the... Yeah, you can trade the lagging asset. Because if you look at YM here, there's like... I didn't trade YM here. I traded ES or NQ, I forgot. But here, like, I don't know how far we're going to displace through these highs and what we're going to target. So, like, if I know that NQ and ES are going to hit these highs, then I can just trade ES to target these highs, right? Does that make sense? Yeah, like you can still trade the asset that doesn't, or it's like lagging, and you can just target the high that the stronger asset already hits, essentially. Um, let's go over some stuff here. First, let's go over gold today. So I know a lot of people were seeing like some sort of SMT here. What was it, like previous high or something? So what do we see here, guys? Like this is what I mean. This like super avoidable. Yeah, this is SMT, right? As you see. But what are we seeing, dude? Like there's no willingness to trade away from this SMT. Really on any of the assets. You see this? All these like super deep retracement stuff. And then we can't even like manipulate the lows either. We can't really trade away from the lows. It's like super like trash PA. Like this is extremely avoidable. For this to be the weaker asset, where is the strength, bro? There's no strength away. So y'all see, like this is like super easy to avoid. Like I'm telling you, like so easy to avoid a day like this. It's not even funny. Um, and look at this asset. Like what? We don't want to trade this, guys. Trust me. It's like I will have slides too. This is my next stream, or sorry, maybe not next stream, but like I don't know, dude. Whenever I finish the slides, because dude, like look at these slides, bro. Like guys, these take a long time to make. These take so long to make. Y'all don't even know, bro. And yeah, it's gonna cover all these little details, though, man. It's gonna be really helpful to you guys. But no, I'm just like, it's just super avoidable. Like I want you guys to start. It all reverts back to phase the price, dude. Like I'm telling you, literally does. Um, where we at here? It's all the way up here. Watch this stream, guys. It's like my second to last stream. Literally, this will tell you majority of everything. This is the if then scenario, right? Like if this has to begin to hold, then we need to see some reversal signature. Absolutely no reversal signature here on this asset. Like I know people took like I don't even know, dude. Like maybe this or something. There's nothing to take care of. I promise you. There's absolutely nothing. Um, yeah. This has been happening a lot in gold lately. Even something like this, like I know some people sold this or something. This is another one that's like pretty easy to avoid. So look here. We have this SMT, right? But there's a couple of things here. I know some people sold maybe this CSD here, as you see. But what are the other filters that we use for price? Well, what are we trading within here? We're trading within a expansion candle on the daily time frame. So that's not aligned, right? Clearly not aligned. How does the daily or the candle profile form? It opens low first. So even if we're going to trade, if we're going to fade this day in anticipation for a reversal candle, it doesn't support that, right? We open low. We actually create SMT here. Right, you see this? So we have a two-stage SMT at the lows as well. And this is after, mind you, this is after we created this huge SMT, like where silver took out a bunch of lows, right? So what are we seeing here? We're seeing this asset. We're seeing a two-stage SMT. So I'm gonna show you like right here. Where was it at? It's like 10 o'clock Monday creates a, oh yeah, it's a bit weird. But you see how we put in a higher high here, right? And then we're putting it in a lower low down here. But you see how the so-called weaker asset or whatnot is also expanding away. So euro and silver swept this low out, but you see how it's expanding away? You see that? This is how you know that, after, if we actually manipulate, where are we going to draw into? It's going to be these highs, right? And this is another thing. SMTs, they generally don't look like this, where they reverse from failure swings like this. That's not how you want to see SMTs form. You want to see it like this, right? Where there's no failure swings to the left. It's like a relevant swing, because that's where we find reversals from. So SMT is like, think about SMT as a filter for stop runs or reversal. And two-stage SMT, or these like little stuff like this, like what I'm just showing you here, and like I said, two-stage SMT and asset, switching, and what else? just reversal signatures is like a filter for SMT. You know what I'm saying? And then we add in like, candle profiles, daily profiles, or um, yeah, not fading candles. Like if you look on the 4-hour time frame, you're fading the candle here, especially on gold. You see all these little filters for price. You know what I'm saying? And then what do we see here? This is very interesting, guys, because this is literally in my slide. What do we see at the, when we engage with this high? How do we know that these assets are lagging? Well, what do we see one of the assets do? It creates a lower low. So, oh, dang it. Where is this? Oh, here we go. So see how we engage with this high on gold, and then the other assets created a lower low, or at least Euro did. So you see over here. So this SMT at the lows is actually the trigger for these assets to expand and catch up to gold. So that's what we see. Look here. It's the same thing where these are failure swings. We don't really care about this SMT. It's fake. We're creating a lower low here. So this is where people get kind of tunnel vision. They start pattern trading. They're pattern trading multiple things here. They're pattern trading maybe this reversal signature, or this CSD, or maybe this hourly CSD or hourly reversal candle with the SMT, etc. But they don't understand, right? Like phase price, etc. Right? So this is just, what is this, guys? Seek and destroy, right? It's another form of consolidation. So what are we not seeing on the weaker assets? We're not seeing weakness, right? Which is something that would be necessary, especially on the stronger asset, which is creating a higher high, right? So yeah, hopefully that makes sense a little bit. It's definitely, guys, S&P is extremely confusing, okay? It's extremely confusing because no one talks about this type of stuff, dude. I've never learned from anyone else this type of stuff. No one ever talks about this stuff. I literally had to learn majority of myself. I did learn a lot of stuff from my friend. But yeah, no one talks about this stuff publicly, really. Like, so it's hard, dude. Like, it's like really hard to learn this stuff. But with experience and stuff, it's all about filtering price, guys. Like, once you can filter out this like stuff like here, then I'm telling you, you will do crazy and amazing things. So let's look at this here. Let's look at another example. This is something I did trade. So, and again, not pattern trading stuff. So look at this pattern here. People are definitely thinking this is internal. You have a bunch of fair value gaps. You have a candle 2 closure. Many things you can pattern. You can pattern train the fractal model. You can pattern train a candle 2 closure. You can pattern train key level. You can pattern trade an SMT. Like, there's a lot of things you can pattern trade, which is something that we want to eliminate. So what do we have here? We have an SMT and an internal gap. Like, it looks so good, right? It looks so great. What do we need? We need extra confluence, right? We need phases of price to support this always. So what do we see the previous day do? It expands, right? So when we go to the 4-hour time frame, what do we see after expansion? We see consolidation. Right, y'all see this? Consolidation. So if this is going to be the strongest asset, for it to be consolidating is a major red flag, right? Does that make sense? Now, especially after expansion, right, into lows, right? We didn't manipulate any of these lows necessarily, right? Because if you consolidate after this low manipulation, then it's not a manipulation, right? So if you're not going to manipulate these lows, then where are we going to go? These lows. And if you look at silver at this point, the previous day, it expanded, right? It was showing strength because you see how it's closing near its own low. Gold is closing near kind of like in the middle of its own range. So we already know that okay, my dog just threw up. Gotta go clean that. All right, we're gonna have to hurry this up here, and then I gotta end it. But do you guys see the strength difference here? But what I want you to keep note of is the weaker asset. So the stronger asset always have something to expand into. The previous is low and these lows. But it's important that the weaker asset also does have something to expand into. And that's all of these lows. Right? So that's just one thing. So now that we have consolidation, which is a continuation signature, on the stronger, the stronger asset. Oh my god, bro. Oh man, dude, I'm gonna have to hurry this up, guys. How do we want to leave a consolidation range? Ideally, we want to manipulate, right? So that's what we do here. Jeez, bro. Right here, and this is prior to the driver, which is in a P. So let's go back to this if-then scenario. Again, all these things repeat every single time, right? So look here. If a reversal has been put in prior to the driver, then the driver should continue. So what do we see here? The next candle is in a P, right? 8 o'clock candle. What do we see here? On the stronger asset, what do we see? A reversal signature, which is expansion met with expansion, right? When you go over here, there's a couple ways we identify a reversal. First, it's a candle close. It's also expansion met with expansion. So we have those two things. Now, what else do we need to see on the way, or after manipulation, what do we need to see? We need to see expansion. What is the signature for expansion? Small retracements, opposing candle supporting price, rejecting highs and lows, etc. Right? So that's what we see here, right? We see a shallow retracement. We're also expanding. Now I want you to look at this because it's very interesting. So as you see, price is pretty heavy into the low. What do we see on silver, the correlated asset? We see a much more high resistance PA, right? So look at this. At the point of this consolidation, what is gold doing? It's expanding. So y'all see that? So when an asset, like a stronger asset, is trading away from its high, this is what I'm talking about with strength switching, right? This is when the weaker asset will consolidate while the stronger asset expands, so the assets can catch up, right, to become correlated. Does that make sense? But anyways, guys, I gotta go because my dog is dying. So, yes, it's Kiko. This is Kiko. I don't like your dog. Yeah, I don't either, bro. Bro's griefing, like seriously, griefing hard. He's barking. He's like freaking dying. Like, what the hell's going on, man? But yeah, like I said, guys, I'm gonna be busy this week, so I'm gonna have to like we can't do this weekend stream probably, but hopefully I have the slides done by next week or something. Bro took a picture of it. All right, guys, I'll catch you all later. Y'all have a good one.